must say I've had a quite enjoyable couple days talking to existing shareholders and people that tell me they're going to be buying the stock on Monday morning. So maybe I can just go through quickly and tell you why they're going to buy the stock. Just a quick overview. Our project is located in the Yukon. It's a very large project. It's heap leachable. Current resource is about 6.3 million tons. There's a reserve that the feasibility study is based on. That's about 2.3 million ounces. The Yukon's a great jurisdiction. Currently, we're updating our feasibility study, and that'll come out in the second half of this year. And the other thing we're doing right now, which is not unusual to these folks here, but unusual in the mining sector these days, is we're drilling. We've got 3 drills running. They've been running since late in March, and we're targeting a zone called Olive, and I'll talk more about that in a minute. Major shareholders, you can see them there. One of the significant things that happened to us in the last month is Sun Valley Gold and Electrum. And Electrum, if you don't know, is Tom Kaplan's hedge fund. They made a large investment in Victoria, put $24 million into the company, and that changed our major shareholders. Prior to that, Kinross was our largest shareholder, but they've been diluted. So we have 3 large shareholders there: Sun Valley, Electrum, and Kinross. We have 3 analysts cover our stock: Cormark, Paradigm, and National Bank. And you can see their target prices there. We closed at, I think, 41.5 cents on Friday, so I think Adam and Richard will be revisiting their targets shortly. Just a little more on Eagle itself. Very simple, open pit, valley leach. Very similar to Kinross's Fort Knox mine in Alaska. Because they've been a large shareholder, we've been able to visit Fort Knox a number of times. I've been there 3 or 4 times over the past 5 years. We've been able to incorporate in our designs what's worked at Fort Knox with their large heap leach operation. The photo there is a slice of core. That's actually from Olive, and you can see why it gets that name. It's got that olive tint to it, but it's also, the geologists recently got pretty excited about finding some VG. This is a shot of the site when it's in production. You can see the open pit. The operating costs are very low because the waste dumps are very close. Stripping ratio is very favorable at 1.4 to 1. And we've got everything very tight there, so a very small footprint. So I mentioned the exploration at Olive. Our program this year, when we started in March, it was planned to be about 3.6 million. We've since increased that because we're getting great results, and we're now at 4.6 million. The objective of the program is to convert Olive to an indicated category so that we can include it in the updated feasibility study. It generally is about 50% higher grade than Eagle, so we expect it to come in somewhere between 1.2 and 1.5 grams per ton. So it could be a very nice little starter pit. Shamrock, we've done very little drilling there, so we do hope to move it into an inferred category. We won't be able to include it in the feasibility study, but we may be able to include a PEA within the feasibility study. And you can see the map in the bottom left-hand corner there, why we're focused on Olive. It's only about 2 kilometers from our main Eagle deposit. Feasibility study update, it's well underway. We're using a company called JDS Energy and Mining based here in Vancouver. We've got a great team. They've been at it for about 6 weeks now. Our goal is to finish it up in August, but I'm a realist and know sometimes these studies take a little longer than you estimate, so I'm cautiously saying August for the getting it out, but realistically it'll probably be September or October. As you know, gold prices have changed, and certainly exchange rates have changed over the last few years, so we expect to see quite an improvement with the new feasibility study just on that basis. But also the commodity prices like fuel, cyanide, cement, steel have all come down. Equipment costs have come down. Power costs, transportation have all come down. So we expect quite an improvement in the feasibility study numbers. And then the other things we're looking at, number one is including olive, and again being higher grade, it'll have quite an impact. And then the second thing, now that we're fully permitted, we can actually talk about scope changes to the project. So included in the this feasibility study update will be the addition of a second heap leach pad. Over the last few years, people have always asked me, is there not a smaller, higher grade project here? And I've consistently said no. The real opportunity with Eagle is to go bigger. So we'll be including a second run-of-mine heap leach pad. And just to give you an example why that makes sense is that because of the capacity of the heap leach pad in the original feasibility study, we actually put 20 million tons of low grade, and when I say low grade, 0.4 grams per ton into the waste pad pile. So, you know, if you're going to be mining it, putting it in a truck, makes a lot of economic sense to be taking it to a heap leach pad. Just some comparisons. I think Brett Cook would like this slide because he always says there's a lot more factors that go into the economics than just grade. So you can see a host of peers there where Victoria falls right in the middle if you look at head grade. But if you look at recovered grams per ton moved, you can see we move far to the left and are by far the best project in a list there. We think we are due for a re-rating. If you look at whether it's P to NAV or EV to M&I resource, we're on the low end. That's changed over the last 3 months. We're moving up, but there's certainly lots of room to improve that share price. Similarly, we're very highly leveraged to the price of gold. Our number one shareholder, Sun Valley, that's why they own us. Sun Valley, 11 months ago, was about a 10% shareholder. As you saw, they're now 18. Most of those shares they've bought in the market. When I asked Peter why Victoria, he says, because you're the most leveraged stock to the gold price that we monitor. So just to conclude, why would you invest in Victoria? A lot of news flow. As I said, we're drilling on olive with 3 drills. I think we've completed 61 holes now, and we've got about another 35 to go. And we've only released, I think, 15 of those holes. So you're going to see news flow and press releases probably weekly coming out of that drill program. Eagle's very large, 6.3 million ounces of resource. It'll produce 200,000 ounces of gold per year at a cash cost of less than $700 per ounce. So, and as Gwen said, is fully permitted. Now, I challenge you to come up with 2 or 3 other projects like this that are fully permitted, produce over 200,000 ounces of gold per year, and are in a safe jurisdiction. I think we can point to ones in Ecuador or Bolivia or Congo, but this is in the Yukon. On the Yukon, very stable jurisdiction. You know, we've been mining there for over 100 years now, and people understand mining, and more importantly, they understand the economic contribution mining can make. And then I always like to finish up on team. We have a small team at Victoria. There's about 6 of us now that are technical people and a couple of administrative people. I think we've done a great job of meeting milestones. You know, if you want a fast-talking, promoting CEO, you probably bought Midway or Rubicon. And where did that get you? But if you just want a bunch of boring engineers, metallurgists, and geologists that meet milestones, have a look at Victoria. Thank you very much.